Hey guys, how you doing? So I'm Dan from Trading with Dan, and this is the leverage trading section of our mentoring program. Right, so we're going to explain what leverage trading is and what leverage is. So leverage, sometimes known as margin trading, is very common in financial markets. So especially in, like, say, forex markets, for example. Forex doesn't move anywhere near the percentages that Bitcoin will move, so you will often trade like a normal margin, a normal leverage for a forex trade would be 20 to 1, sometimes maybe just 10 to 1, but often it's basically 20 to 1, and obviously forex pairs don't move much. So what that means is, say you're trading with £1,000 account or $1,000 account, and you want to open a position with the whole of your account. You can actually open, if it's say 20x, you could open up a $20,000 currency position. So you would be exposed, say it was a cable trade, so a GBP USD pair. What you would do is then you would be exposed to the move of $20,000 or pounds if you're working in pounds, with your 1,000 pound or dollar collateral. So what that means is that, say the $20,000 position that you've opened at 20x with $1,000 margin moves, and that $20,000 then becomes worth $21,000. You actually double your funds because they've gone up by $1,000 on a $20,000 position, and your actual collateral was only $1,000. So you can see that you've made a 2x on your money when the actual asset only went up basically 5%, not basically 100%. So yeah, so what in effect you're doing, you're sort of borrowing funds that will then amplify your returns. Obviously that's assuming you get the trade right and it goes the direction you think. But conversely, if we go back to that other forex example, so instead of going up by $1,000 to $21,000, say the value of the pair you bought went down, the value of your position went down from 20,000 to 19,000, i.e. $1,000 down. You basically lost all your money, and you've basically been liquidated on your position. So that is the risk you take. So obviously leverage is increasing your risk. In theory, it's increasing your risk of how much money you can make. So you basically can make more money. You're at risk of making more money. Obviously that's a good risk, that's good if you make more money, but you are at risk of losing more money as well. So let's look at a BT, for example. Say you've got a 5 BTC account and you're using a 10 to 1 leverage. That means your position is actually equal to 50 BTC. So say the price of Bitcoin goes up $1,000, because you've got 50 Bitcoin, you're actually going to make a $50,000 profit on your position. Right, so obviously because of the nature of this, how it amplifies your risks, your gains and your losses, it's not really suitable for something for beginners. It's not really something suitable for beginners. So you have to be an experienced trader. You have to know what you're doing on an exchange, how to trade on the exchange, how to put in the stops, how to manage your risk. You need to make sure you put in the right values in, trading the right pair, the right asset you're looking at. You need to know all these things. So this is why it isn't great for beginners, because obviously if you make a mistake, say you put in 100x rather than 10x, and you don't really pay much attention, it only takes a 1% move in BTC then for you to be liquidated on that entire position. And if you leveraged your whole account at 100x, so you put in a position, say you had 1 Bitcoin and you leveraged your whole account at 100x, so you were basically exposed to the value move of 100 Bitcoin. It would only take Bitcoin to move down 1% for you then to lose your whole Bitcoin, all of your trade. So obviously the flip side, Bitcoin goes up 1%, you're actually gonna make a whole Bitcoin. But I mean, these are big risks to take, and this is why you need to be careful so you don't make any mistakes when you're doing this. So 100x is obviously quite a lot. We usually trade in this group. We normally trade on Bitmex, and Bitmex does have 100x leverage. But a lot of accounts, a lot of trading brokers don't quite have that amount of leverage even for BTC. I don't actually use Coinbase Pro or Binance, but I do believe they have like 5x leverage. And then there's other accounts which is just normal Coinbase that doesn't have any leverage at all, so it's basically 1x. Right, so what are your options when trading? So your options are basically to go long or to go short, and then when you do one of these, your equity is then used as a margin, but you don't have to take out a position where you're leveraging the whole balance of your account. Say you've got 1 Bitcoin in your account and you want to put on a 1 Bitcoin value trade. So when Bitcoin goes up, you're going to make the value of that 1 Bitcoin extra. So what you do is you could put on a position size of, you could basically put on a position with 10x for 1 Bitcoin. But what you would actually do, because it's 10x, you'd only be utilizing 10% of your account. So you could then put on another trade in, say, Ethereum or a different Bitcoin contract with another 10% at 10x, and you can diversify your portfolio with different cryptocurrencies using basically your same amount of margin, but leveraging it up. So yeah, so obviously the equity in your account is used as margin, but when you do this, you do need to be careful not to be liquidated, because when you isolate that amount of margin at a certain leverage, so say 10x, obviously once the market moves against you, if it moves far enough, you will then be liquidated out of your position. It won't use any more of the funds in your account other than what you allocated at 10x for it. But you will still lose that amount of money. Right, so what are the reasons that you would want to use leverage, bearing in mind everything I said about how risky it can be? So one of the main reasons, actually, especially if you're trading on Bitmex, which is a Bitcoin only exchange, is you would use leverage to actually profit from a falling market. So if you've got 1 Bitcoin that you then put over to the Bitmex account, and then your Bitcoin is there, you can't really trade it to change it to fiat. There's no Tether or True USD or any of those other stable coins to transfer it into. So say Bitcoin's going to go down and you think Bitcoin's going to go down, you can actually open a position to then profit from it going down, or you could actually just open a position the same size as your actual BTC amount, just to hedge your BT exposure. Also, what you can do with it, you can use the leverage to make larger profits from a rising market. So like in the previous example where we said if you have 1 BTC, you leverage it 10x, then you have 10 BTC. So then obviously every $1,000 Bitcoin goes up, you're actually benefiting from 10 lots of $1,000, because you've leveraged your 1 Bitcoin 10 to 1. Right, so yeah, so that brings us to the end of this video on leverage. It's just a quick one just to explain to you what it is, so that we all know we're on the same page, and so you guys understand leverage. You guys kind of know that what you need to do, what you need to learn, and just basically all the things you need to know before you start using it, which we are going to cover in this mentoring video, because leverage can be very useful. It's a very useful tool, but you obviously have to know what you're doing and have to be very careful with it. So thanks for listening, and I will speak to you guys on the next section.